Welcome back to Investing with Confidence. As always, I am your host, Joshua David, and we are analyzing some different stocks here today. We had great moves in these markets this week, S&P 500, even the last week, big drops in the market, opportunities in both market directions, up and down. We talked about Moderna, Gap. They're actually down big time off their highs. Will they continue to go down now that the major markets have started to slide a little bit? Who knows? Well, you know what? There's opportunities no matter which way it goes. And we talk about that in these investing classes that you teach here, Al, right here in Bloomington. Free investing classes, 2 hours on the weekends, also during the week. So if you want some tickets to that investing class, I'm giving away 2 here for each person that calls in right now, 952-814-4410. You're also going to receive some free stock picks when you get registered for this class. So just also text the word invest to the number 484848. Follow the prompts back. Make sure you get registered for this class so you can get that quick start kit that includes those stock picks. So, Al, when we did talk about in the last section, people are looking for income in the markets. It's because everybody wants to improve their life. It's all about improving your life. Hopefully you have goals and aspirations to do that. But people work during the day, and it's tough to do that during stock market hours because that's 8:30 until 3 o'clock our time here in Bloomington. So when people are looking for extra income, they need to have a leveraged asset, a 24-hour market, so to have opportunities to even do that in the evening. And that's what you talked about in the last section. Well, let's analyze a couple stocks here, continuing, I guess, doing that. But first off being Twitter. Now, that is another one that people, I think, follow. It's a pretty well-known stock.
Sure.
And people that are investing in Twitter, a lot of people do that in their long-term accounts, from what I've heard anyway. You see it all on TV all the time. But people that are invested in Twitter right now, it is off its highs right now, roughly about 58% off its highs. So people that own Twitter right now have probably not slept at night or have seen negative returns in their retirement accounts. What do you see moving forward with Twitter? Is it a buying opportunity, or is there ways to protect with options if they have stocks? Have that stock?
Yes, no, yes, no, yes, no. There were several questions in it.
Yeah,
but
take your pick.
All right. Well, is it a good buy? Well, you know what? Twitter and a lot of the companies like that, Twitter is in that communication services index or part of the economy. A lot of the high flyers like Twitter, let's look at Apple, Intel, maybe not so much Intel, but companies like Tesla, NVIDIA, Netflix. Those are high-flying companies that have done really well. But the problem is that they have become so highly valued that any little hiccup is going to cause them to really get spanked. And that's really what's been happening with companies like Twitter. So many people invest in it because they know about Twitter. Maybe they're actually participating. They have an account, and it's part of their routine, so to speak. So they think that because so many people are involved in it, it will continue to go up. But there is no company so good that the stock price can't be so high that it's a bad investment.
Yeah.
And that's kind of what's happened to a lot of these companies now. The valuation has actually gone up a multiple of what the normal valuation would be. And for a lot of these stocks, they're overvalued to a point where they either never have been that high or they're part of a group that hasn't been this high in overvaluation since the internet bubble.
Yep.
And when we've been overvalued this high, say 26-time trailing earnings, it's only been that high once before, and that was I'm sorry. Yeah, it's only been that high once before. That was in right before the internet bubble, and it's only been above 29 times, and 7 of those times have been followed by a bear market with an average drawdown of over 42%. So it's questionable. And again, my opinion doesn't really make any difference. It's not my opinion. It's the activity of the big players, the hedge funds and the institutions. So the important thing is being able to identify where those people are. Where are their buy orders, whether it's for Twitter or the Gap or whatever the company is. Where are their buy orders and where are their sell orders? Because that will dictate what happens to Twitter's price.
Yeah.
And really all you need to do is learn how to read a price chart. Once you can do that, you don't even need to know what the company is. You should be able to look at a price chart and know whether there is a good investment or a bad investment there. And that's what we teach our students. We teach them how to read a price chart just like a radiologist reads an X-ray or an MRI. There's stories that they tell to that radiologist. There's stories that a price chart tell to traders and investors if you know how to read the story. And that's really what we do. We teach you how to do that.
Yeah, and that's the key, is to understand the story, basically the words in the story. Speaking of, you were mentioning valuations and the big players, the big money. Well, there's a Buffett indicator, which is, he's a big money guy. He's got lots of money. He has the clout, as you would say, to move the market. And he has an indicator that says it's highly overvalued. It's 181% of over GDP. That's how they value that, which is which is positioned to analyze a return of a negative 1.7% based on historical valuations of the stock market. So his indicator is saying the market's overvalued, just as Al was saying with some of these stocks, but showing a visualization of upcoming markets at a negative percent rate of return.
Yeah.
So that's why it's important to understand how to read the price chart and make your decisions based off facts, not what the news and TV is saying. So, and you talk about that in these investing classes. You were talking about how to read a price chart, where to be buying and where to be selling, and then protecting your portfolios. So I want to give away tickets to this investing class right here in Bloomington. You can call 952-814-4410 or just text the word invest to the number 484848 and pick a date for this investing class. You're going to get a text for that. So we talked about some valuations here. Let's get into that next stock. We got a little bit of time here yet. It's Viacom. Now, Viacom is still kind of mimicking these, but this one is seeing a major we'll say correction. I mean, it skyrocketed up for a couple months here, getting up to about $100 per share. Right now, sitting roughly right around $30 per share, which is roughly down, depending on when you listen to the show, about 70% from its highs. Yep. So these are opportunities of potentially buying, or it could continue to go down. But the market's starting to go down a little bit. What do you see moving forward?
Yeah, Viacom was a very strong component of the S&P 500, and for many years did very well. It has taken a huge hit. It's, again, part of that communication services sector, same thing that Twitter is in. And, those sectors have been hit pretty hard. And again, it gets down to what the people that have big bucks, what are they going to be doing? They're the people that are going to be moving the price of something. And earlier you talked about waiting until a price comes to you.
Yeah. What
we mean by that, it's not coming to you. It's coming to an area where we know there are buyers and sellers. So I guess the point is that you need to have patience. You need to have the patience to wait until the price gets to an area where it becomes a good investment. And that should be your goal. Your goal should be to identify a price, an entry price, where you have the lowest risk and the highest profit potential with the highest probability of it working in your favor. That's a quality trade. That's what we help you identify. And that means that sometimes there might not be a good trade for you to take. So just wait until the price gets down to an area that really is worth the time and the investment that you're going to put into it. It's all part of a strategy we have. That strategy, that core strategy, is also built into the trading platform, the Click platform that we have that we give our students, which is a trading analysis and education platform. It makes you follow certain steps. It gets you to a point where it tells you whether it's going to be a good quality trade or not. Is there enough of a profit there for you? Is the risk small enough where it's worth you taking that particular investment?
Yeah, I'm glad you brought that up, because you were talking about having patience in the financial markets. The strategy that Online Trading Academy has is, first off, it's designed to follow the institutions. It's designed to find out where they're buying, where they're selling, to make smart investing decisions. But it also helps build patience in the markets. So waiting for price to come to you, not chasing price. A lot of these stocks that we're talking about that are down, they were up at one point a lot. And then what happens is people just jump in at the end of it, hoping it continues, and then it just turns around. And that's why a lot of investors struggle in the markets. Well, how about having a strategy that's designed to do what the institutions do, but do that with confidence and consistency? That actually brings longevity in the financial markets. Because are you looking at the financial markets for a get rich quick, or do you want to have the opportunity to build wealth? It starts with knowing how the institutions actually move price and the strategies that they use. We talk about these strategies in these investing classes. We give details on what it is, what supply and demand is. So say you have like retirement accounts, 401ks, IRAs, how to make smarter investing decisions in those, protecting what you have. If the market continues to drop like it did in the last couple of weeks here, okay, what are the opportunities in down markets with your retirement accounts? So if you want to learn more about that, it starts with a little bit of action. Action is these investing classes. So call 952-814-4410 for 2 tickets. You can also text the word invest to the number 484848 for 2 tickets. When you get registered for this class, we're going to give away some free stock picks, and it actually analyzes and gives you the reason on why that's a potential buy area, sell area, so you can see how that's actually done. Coming up next, we're going to talk about more of the S&P 500, silver, and oil. We'll be right back.